In the latest wave of interest rate cutting, the Reserve Bank of Australia has slashed interest rates by 25 basis points to 2.25%. Australia thus joins the growing list of economies which are trying to control their monetary policies to ease them as a way to revive growth and also in the midst of falling commodity prices. Now, Australia has joined Denmark, Switzerland, India, and other countries which have been on an interest rate cutting spree. Australia has been hit particularly badly because of falling commodity prices. Australia, as you know, is a very commodity intensive economy. Now, there is a new era in the world which is called zero yield to negative yield. That's a new acronym which is gathering pace, which means that there is going to be a great hunt for yield in the midst of falling yields in many parts of the world. Therefore, countries like Switzerland, which have zero to negative yield, would be looking for countries where the yields are much higher. For example, in India, where incidentally also the yields are lower, but the differential is much higher. So therefore, one can see great amount of money moving into emerging markets like India, especially in very high quality paper and where the yields are much higher. This is going to be the new trade and the trade which I believe is going to dominate most of 2015. And I believe that this era is going to continue until growth begins to revive once more in the world. IMF has further cut down world growth forecasts by 0.25% recently. As you can see, growth is slowing down almost every part of the world, particularly in China, which is a very important barometer of industrial activity in the world. In the face of falling commodity prices, poor demand, and in fact, there are signs of deflation in many parts of the world, particularly in Europe, where the European Central Bank, the ECB, is trying so hard to pull the European continent out of the deflationary scare that has come about. Will the central bankers be able to succeed? Yes, I believe this is a very important question, and I believe the quantitative easing, which did well for United States a few years back, should be able to help other countries as well. But as long as it is able to revive growth in a fundamentally strong way and for a long term, the central banks have their hands tied, and there's only that much they can do. In the meanwhile, as a very important way of investing, do look out for yields in many parts of the world where they are still continuing to be at very high. You can get them at almost 8 to 9% in certain emerging economies in very good high quality paper. I think more money will move in that direction. You will find that more supply will also start arising to be able to capture this new inflow of money, and this is going to be the latest trend which I believe is going to dominate 2015, which will be helpful not only for the investors but also for issuers of paper in various countries in the emerging continent. So happy investing. Do enjoy the differential in yield in various countries to your benefit, and I believe this is a very smart way of investing in 2015. Take care. Bye bye.